Business loans for startups with bad credit, even good credit considered, no collateral needed whatsoever. As well as if you stick with me until the very end of this video, I'll get into one strategy many people are using right now in this market and moving forward to get a lot more in funding. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, business loan broker expert, as well as pre-underwriter slash underwriter who's been able to help a lot of people get the right type of business funding strategically with the right roadmap and longer term strategic partnership without overwhelming anybody, not over promising and under delivering. I'm very responsible, accountable. I'm a Libra, if that says anything. I'm very loyal. I value that immensely. Integrity, being trustworthy, humble, having the right character, core values, vision, and mission as a person is first and foremost, and putting you first as a person in your health, your relationships, and then your wealth. And then how does that transpire into your business? So in this video, I'm going to get into a few ways you can fund your startup business. If you are unaware of or you're just unsure about how to go through the process, I can also help you with that. And I'll leave more information for you down below in the description for you to get started. There will be a questionnaire form. I won't go through it all right now, but that's the most appropriate place to begin. So, what are all of the options out there for a startup business that has bad credit? First of all, I know how hard it is getting started in a business. Not just the formation of the business, but making sure you have everything set aside, planned, savings, if any, and any other circumstances, family and friends helping out, or just them knowing about you starting a business, and then getting every component together, making sure everything is good, ready to go, the formation of the business, the structuring of it, and then realizing you really need the funds. Where are they going to come from? If they don't appear there, if they don't arrive in time, you won't even have a business, or you're just going about it the wrong way in how you have it structured. So I know all of those circumstances. I started way back in the days, so you are not alone. So there are micro loan opportunities with like an Axion. I like to call it Axion. There's different ways of pronunciation, but this is like a micro loan type of situation. There are a lot of nonprofits for micro loan programs, and they're able to look at bad credit even as little as like 570, more or less than that, even less than that in cases. And not that they'll fund a great amount. It could be up to 50K. Maybe the average person gets 10 to 13K, more or less. So it's on an individual case-by-case basis, as well as the business entity, the formation, the operations of the business, how you'll exactly use these funds, the projection of cash flow, profitability, and all of these other circumstances and some outliers out there. But there are places like that, Akiva. There are other locations that can work with you. If you're trying to get government-backed type of funding, there's also on top of that, you have the SBA. So the SBA is one, but they're going to look at you having good credit. And you can't just piggyback off of somebody unless you are going to be a part owner, but they're going to check your credit as well. So if there's multiple owners in the business, all it takes is one person's credit score to really decline a file if it's not what it needs to be. So that's another case to be made, but that's not necessarily for bad credit. That's also more for good credit. But another one you can look at if you're a startup with bad credit, aside from those options, are more peer-to-peer lending situations like microloans, like I've mentioned before. There are other organizations. Perhaps you can get in touch with angel investors, venture capitalists if you have the right idea and those make sense for creativity, product market fit, the right amount of EBITDA projection, cash flow. There's a lot more underlying. A lot of things you need to give up in equity for a partner. And there are a few other solutions out there as well. You can turn to friends and family, and that's what I want to focus on in this one. But first, before I go into that, another one that's in the middle of it is like a cash advance. I'm not sure if you've heard of these, but cash advances are based on your future receivables. And this is where you get an advanced lump sum based on what you're making in future sales. I won't go into all the technicalities of it. I just want you to know that that's on the table, and lenders are willing to consider bad credit. And bad credit can be as low as 450 in a lot of cases, or there's no credit check. Some of these lenders, one more than most, will not even consider a credit score requirement, but they will look at revenue. So you want to have at least 3 months of revenue in the business with at least 3,000 in monthly revenue on your lowest month in the last 90 days. So think about it, the last 3 months, your lowest monthly revenue has to be 3,000. It can't be less than that. It can be more than 3,000, but anything less out of those 3 months, you may have 2 months that are less, or just 1 month, or all of them, or you're just close to it, but you're like, I'm just trying to push over, but what do we need to do to get there? There are other circumstances we might have to work on, how we properly manage the business, how is the cash flow being managed, how will it be managed? And there's probably unseen ways of generating revenue in the business that you might not account for. And I'll get into a few other situations you can take advantage of. So one of the biggest ones that I recommend right now, and this is where I'm going to try to end it, is getting a credit partner. And before I go into the credit partner situation, I wanted to say this in the beginning, but it went by me. I'm a very introverted person. I'm not here promoting or sponsoring anybody. I'm not here being flashy. I want to make this content as authentic as I can make it. You see the backdrop here, nothing shifting, nothing moving. And a lot of people who have been following me see that authenticity. And it's very real, it's raw, it's material. As an expert who knows their stuff, what makes sense and what doesn't in the market. A lot of you get overpromised and underdelivered, overwhelmed substantially, and it's bad. Like, I hear about it all of the time, and I steer people away from the wrong place, and I go, oh, you would never have wanted to go there. For them to lend you money, this is how it's going to work. Or here is what I predict will happen based off the format, based off the city, based off of different locations, or based on experience. A lot of the time is like, this is what I want to do. I wouldn't do it for myself. I would not want you to do it and go through it. And then later on come back to me and say, oh, well, I should have listened to you. When you had a chance, you had a chance. And a lot of people come to me as the final destination and only destination, and it's because of who I am. It's not the business entity and why Viral Funding Solutions is there, but why as in a person. And so for me, I really do care about you first and foremost, and then helping you get the right funding. Now, with this next part, credit partner. A credit partner just means you have a friend, a family member, it could be a spouse, maybe an employee, somebody you work with, somebody you will depend on to help you secure, to guarantee, act as the guarantor in securing the funding. So once you have a business, you have your LLC, you got the EIN, or if you don't have an LLC yet, you're operating as a 1040 Schedule C, however you have it set up as a sole proprietor, and then you maybe get into LLC, which is something that I recommend to protect your personal assets. A lot of stuff happens in the business. You're commingling funds, especially if you have that, but you don't have a business checking account. You don't want to commingle funds and start adding all of these different businesses you might have, and maybe contracting positions, subcontracting positions, and a lot of that money is going into that one personal checking account or multiple accounts from different banks. So that's something else to take account of. I won't go into all the specifics. I'm putting that together. If you'd like to learn more, I'll leave more information down below on business credit building, putting your accounts and stuff like that, but also more on the questionnaire form. That's where I would begin, because I'll still show you that along with your other options on credit, cash flow, collateral, liquidity, equity, and more. A lot of people love this, and it's a way for you to reuse it. It's in a PDF format, excuse me. I'm not used to talking much. Again, like I said, I'm a very introvert, more quiet, reserved person who's very analytical, and I look at a lot of bank statements and credit reports throughout the day. But for this case, let's say you're 100% owner of the business, but your credit is bad. Yet you're looking at getting a personal credit card or credit cards, or even business credit card or credit cards. It could be a personal loan. That's what you favor. Or it could be a combination of them. Perhaps it's a personal line of credit. This is where we get into the creative credit-backed financing. And this is the option. And this is the most lucrative one everybody wants right now, but not everybody could get because of low credit, subprime credit, as well as bad, poor performing credit. And so what you could do in replace of you being 100% of an owner is bring somebody in. Let's say you want to get business credit cards at 0% interest for 6 to 18 plus months. You could put somebody on your operating agreement and have somebody there for at least 10% more or less ownership. Well, 10% and above, I should say. And I would usually do it at 20%, but if you're trying to get in the littlest amount while trying to secure the funding, 10% should be very minimal to start off with. And sometimes these things change, so you'll know about it over time, but 10%, bring somebody in. That way, that person with better credit, and I say better credit as in not just 670 or not just 680, but 700 plus FICO Experian, as well as Equifax and TransUnion. So we're looking at all three credit bureaus. And if you're trying to get 0% interest business credit cards for multiple uses, let's say we go to a Chase, a Bank of America, US Bank, PNC Bank, Truist, you might not know from where they will pull from your geographical location and where you're targeted. But also, you have to understand how much you can get from each and how you can liquidate cash out of the right cards, of what cards you can liquidate out of, and do that at a low cost and a low fee. There's a lot more. That's just some of it. But if that's something you're interested in, I'll leave more information for you down below in the questionnaire. Excuse me. That's where I would get started. And I'm not a video person. As many videos as I've done, because I've had to practice, you guys don't understand how much goes into just one video. I dislike it. I like the practice of it, but it's just so many times. Like, I'd mess up a video and then come back and then have to do it all over again, like 5 minutes in, because I'm not video centric. I'm not like my words. I'm not a, what's the word? I'm not a, I guess I'm not the best with words. I've gotten better at it over time, but I want you to make sure and understand that this information is very congruent and stuff that'll work and what's best in the market. Like, I work with the lenders all the time. I've served better as a back end person, to be honest with you. I like being more of a silent partner. I do still have to do a lot of the front end stuff though, so I understand that, and there's a lot of great stuff that comes with it. So with that said, get a credit partner, somebody who owns at least 10% of your business. They can have their own business and own more of it or less, or more than 10%. Probably own 50%, 100%, or a majority shareholder owner, or however they want to look at it. And if you're trying to get business credit cards, but you can't underneath your credit, they can secure it for their business, but it'll be underneath that business entity that they go and apply with. And so what you could do is have them partner with you, or have a separate person partner with you, whoever that may be, whoever you trust, and you give them that. And they can come in and apply with their individual credit to guarantee the credit lines and assist with that. Until later on, there might be a balance transfer of those credit lines or credit line with you improving your credit rating, your credit score, in other words. So that's one circumstance. If they're not a part owner of the business of any capacity, then it would only trunk down to like personal term / installment loans, perhaps just personal lines of credit on the personal side. And they don't even have to be a business owner with you, by the way, on that. So they could be a business owner, still go for the both if they qualify. But if they're not a business owner, you bring in a family member, you want them to help you, they can go and apply underneath their credit. That will be evaluated. There's no other ways of doing it. It's per person. It's not co-signer, co-borrower. Co-signer is on like more of the personal stuff when you're filing joint tax returns for the most part. So that's what it would be, and it's always preferably a spouse, and that's usually how it turns out. So you can kind of add both incomes and something like that, or sometimes it's separate. But that's what we're willing to look at. And if you have bad credit, again, if you're trying to look for a startup business loan, the really other way of interpreting that is as a personal loan. So startup business loan, if it's not revenue backed through, like I said earlier, with a $3,000 per month in about 3 months or more so 4 months time in business, and you don't have good credit, it would be a personal loan that can be secured by somebody else that can help you, whether they're an owner of the business or not. And there's also creative credit-backed financing through 0% interest business credit cards. The other thing to do is look at your community credit union. I know that's a simple thing. It's easier said than done, especially if you don't have a membership or a relationship with any of them and it's not formed correctly and you don't have access to. Not every single one of them will lend you based off of bad credit, but you could secure a personal loan. You can do that, add some into the account, turn things unsecured. From there, build your credit, rebuild your credit. You can try to form that with other institutions, deposit a little bit into each, but it's not as simple as that because they're going to look at it, especially from where they pull from. So find out that with your community credit union, the more targeted you get within your community and find a community bank that's not located anywhere else, the better you're going to be because they tailor to you as the individual within that state. And it's within the community of an organization. And so they're more helpful than others who you'd find more regionally targeted. Not to say that they wouldn't work, but look in that case. Also, look at authorized user trade lines for those as well, so you can get that. And also take on somebody else's credit, take on their average age. And if you're underneath a year in a revolving account and you're trying to get to 2+ years and they have that, of course you want that from them, but also make sure that they have high enough balances, have high enough credit. What's the purpose of doing it? Just to build age of accounts and age of history that you're going to accumulate from them. But if they don't have enough balances and they don't show demonstration of use of debt, and whether it's installment or revolving, like if you're trying to get business credit cards and them having to apply, are they going to be a part owner? Do they have too many authorized user accounts? That's something also that can disqualify people. So keep that in mind. And I can communicate with this stuff with you in time. Startup business loan for equipment. There's also that out there. A lot harder to, especially for transportation niche type of businesses. It doesn't matter what type of transportation, trucking, does not matter. Go into logistics of any kind with trucks. You can get into hot shot, whatever it is. There's many transportation businesses for events, whatever it is. A lot of it is hard right now, but not to say it isn't doable with the right credit. Even if you have lower credit, like it's on a case-by-case basis, depending on revenue, depending if there isn't any revenue, what can you put down, how much can you put down. Interest rates and terms may not be as favorable. Sale leaseback situations and other lease agreements you might already have. There's a lot of there's a lot of little things. But that for the most part is it, guys. I know there's other options out there that are available, but these are the most important ones. And other ones you might want to find shortcuts in. Be very cautious. Other ones out there, people persuading you. And if they have to convince you to do something, they are not the right person for you. If they're not only confirming what you already know and more of what you need to know, they're more the better person to work with. And why I'm not traditional, like I said again, I value you as a person. Loyalty matters to me. It's everything. I'm not a talker. Smooth talker is the word I think earlier. I'm not a smooth talker. I'm not a salesperson. I come from an academic background. I went to school. I studied sociology, played Division I soccer for a little bit, went into chemical engineering. I'm a very math, system-oriented person. And then I had to make a big decision after doing that for some time. Got into the business I went throughout that with that degree. I worked in construction, manufacturing, warehousing. I was a ramp agent at some point. I've done other roles. Not that I was unstable. I was just figuring out a lot of things. Not everything in life is linear, even for an academic student like myself in the past. But that was great because I learned a lot. I was in the hands-on field. Construction, job sites wasn't for me, but I learned a lot. And then also in manufacturing wasn't for me. Worked with my dad at a point in the construction business. I worked with my uncle and other people that I knew there, my cousin as well as a few others that were friends. And then I've done stuff with my hands, of course, operating the machinery for tooling and equipment and pumping out tooling and a lot of other things. Working with chemicals, that was great. I love that because chemistry is my favorite class, was my favorite class. So I don't want to go too on about all this, but then I got into financial logistics, started doing a lot of data analyzation and looking at a lot of things and ordering inventory and inventory management, supply, fees, storage, coordinating with the trucks, coordinating the logistics, coordinating the media that was being moved, and then doing stuff on the computer. I still had to move media boxes, working for a huge contracting company, servicing HP and P South, and I still had to do physical things. I'm not a physically gifted person. I was an athlete at one point, but I'm not athletic. What did I have? I've only enhance these more over time in entrepreneurship, and you'll learn this over time as a business owner. If you work on yourself, that's where it all begins. So did that. Company went down under for financial logistics. Not my fault. 50 plus people removed. And I had to go back on unemployment benefits, food stamp cards. And then it was just going to the grocery store. Introvert me, like, no. I didn't even want to look. I couldn't even lock eyes with the person. Can't even look at them. I just said thank you. It was very appreciative, of course, but then thought I had to come back here again, do this. And so not that I had to, but at the time I was in a position where I could start the whole business and really not have all of that pressure of now having another job and having to focus on this. And I did it for a little bit while I was still in that position, retained. While I was working in that company, I was doing some of the planning for the business and putting things together and working at home. Before I went to work, I would do that. I would wake up so early and work. I'd wake up like at 4 a.m. for a couple of hours, from 5 to 6 or so, from 4 to 6 or so. And then I would get out from that. I would get ready. I'd put on my other clothes. I'd literally like come down without any, like without being dressed. I'd be there like in my pajamas, my clothes ready to change into, and then go out to work. But that's called wanting. That's called the want for. That's called desire. And so did that, got into a digital marketing agency, lead generation business, got into health affiliate marketing, helping people with vitamins and supplements. I have one down here of many. I'm looking at it right now. And helping people with like proteolytic enzymes, educating them on them and how helpful they have been for me, not only as once being an athlete or playing soccer, but what I do without that. And so it was a process, learned from that, and then showed people how to use all of this and helping people with their back pain because I had those issues. So I built that business too, have a few other verticals there, other ventures, and then this has been my primary focus as a business funding expert. Having funded those businesses, I wanted to show people how to go the right way, not go through the wrong path. Like a lot of I'd say it's not like an actual number out there, but I'd say from what I have, over 90% of people, they start off on the wrong foot. And there's so much information on the internet today that I wouldn't blame them. But at the same time, when they have the education and they go off and do something that they shouldn't have done, hey, I'm not going to baby you. I have energy and time that I need to take care of. I don't want to stress out and feel anxious over something that I shouldn't be. So you deal with that. I already helped you. I showed you the way. You're letting your ego, your stubbornness, your ignorance, your cockiness get in the way. Let's leave that out the door. If I'm going to help you, leave that out the door. Let's not create any friction or resistance, especially in the process. It won't be by me by any means because I have this down to a science, but it's usually the other person on the other side, or if there's multiple parties. But yeah, I did that for some time. And so I wanted to show people what the right way was and not having to fall in the wrong hands, which a lot of people do. A lot of people get taken advantage. Sucks. Overpromised and underdelivered. It can be very cutthroat. It really much is. And then a passion for it. It's a passion project that just happened to be something I've been doing the majority of my time on because those are all outsourced or for the most part there and passive. So they're working. And I just come back from time to time. And it's been a passion project. I'm not doing it for the money. It shows when I help you, I literally don't have to say it in a call. I'm not going to have to always tell you that, but just hear that. You don't always have to be on a call with me. Everybody thinks you need to be on a call. That's not how it works all the time. And you'll understand that. You'll own it when you understand it because of my culture, my ecosystem, my systems, everything, my processes, the right amount of automation, not all the way, not always there. But you're going to understand this culture, you're going to understand this ecosystem and where you got to meet me and why it makes sense to do it the way that I do it. But yeah, that's that. And driving the economy is a big reason because of where we are and what a lot of small businesses, even bigger, medium, the bigger size businesses do to the economy. And I just wanted to see people thrive in their community. Even when I saw a lot of lower community businesses serving, and maybe it was only one grocery store or one liquor store, whatever it was, and that was the only one, or there's Mary or John everybody would come to, and it'd be a place that they could hang around and feel good in a very constructive way. But if that were taken away, or if they didn't have enough inventory, if they didn't have enough the supplies to help their family of low income and all this other stuff, not only low income, but I started to see that effect and then the happy smile on people's faces when they got the product or the service they needed, but not just in that moment, but how they used it and more of what they needed. And so whatever they were able to fulfill on, it had to do more with like the levels of stress, the level of confidence, the level of certainty. It was just the whole status of the owners, the status of the employees, the status of the customers that they were serving. And the whole change is all about that in a lot of people. And so that's why I began to focus on this side more than anything else. And that's where it became a bigger passion for me. And I've been on this mission for a while now. And that's it. All right, so I'm going to leave you with that. All information will be down below in the description. If you did get value out of this video, if we were like filming a movie and at the end of the movie, you know how sometimes they show you all the, what are they called? The outtakes or the extra times they needed to make a scene. For me, it would probably be like 50 to 100 times. All right, let's start again. And not that I have presentation fright or anything. It's just like introverts. If you're an introvert, you understand. I don't have to tell you. Those of you who are extroverted, I might have to tell you, or you already know. But it's just a thing that happens. My brain is wired different. My brain is wired to read data, to look at numbers, to calculate, calculus, inferential, descriptive statistics, looking at science, looking at the reverse engineering of this and improving this system to make it better and more efficient, creating pages for people. Doing all that stuff is more of my bread and butter. Reviewing bank statements every single day. I got to get back to actually a few before 12 p.m. Pacific Standard Time, my time. But that's what I'm going to leave it at. And if you haven't subscribed, please go ahead and subscribe and click that bell notification icon so you do not miss any future content I will be coming out with. That is all for now. Take care. Bye.